Hey, what's up, everyone? Welcome to another episode of Trading Takes, presented to you by Investors Underground. I'm Sam, and joining me tonight is Chris and Judah. And tonight we are going to be talking about technical analysis. Is technical analysis the holy grail for traders? And to talk about technical analysis, we need the godfather of VWAP. And he just happens to be available. So everyone welcome Mr. Alpha Trends, Brian Shannon. How are you doing? Thank you for joining us.
Hey, good to be here, guys. Thanks for having me on your show.
Thank you.
And absolutely. Thanks for coming on.
I'm really nervous about introducing guests. I don't know if you guys saw this week, but Dana White was on a podcast. It lasted about a minute. He was introduced, and then he just literally dropped the mic and said, I don't want to do podcasts anymore. So Brian, are you going to stick around?
I'll be here. No prima donna. No prima donna here.
Yeah, that wouldn't be the best start at all. So last week we asked all of you to share your biggest aha moment or breakthrough moment in trading, and the winner is, I might struggle to say this, Saeed Ajabi 364. And I think that's a great point as well, that you got trading, but I think a lot of people think, I'll just get consistently profitable and then trading will be easy. But I think we all know that is absolutely not true at all. And Brian, while we're talking about aha moments, I know you shared this on the interview with Anthony, but I just wondered if you could share yours, because I just think it's brilliant.
Anthony Crudelli.
No, with Anthony, the Investors Underground.
Oh, Anthony. I'm sorry. Yeah, there's been a couple Anthonys.
Yeah, I'm gonna say, I know you do so many of these. So.
Yeah, and I was just on with Crudelli recently. I mean, my biggest aha moment, as far as the volume weighted average price goes, it was I think 2005, and I was on a platform called RealTick. RealTick was basically the trading platform of the day back then. And there was a VWAP setting. I had never heard of it, didn't know what it was. And it was able to show the volume weighted average price for whatever time frame you had on the screen. So I would put it on there on a 1 minute chart, and I'd be able to see that it made sense that prices would find support there or resistance there, and then continue their directional movement. And then I kind of figured out that if I put it to a 15-minute time frame and went back 5 days where there might have been an earnings report, I would notice that, hey, it seems like it finds buyers along the volume weighted average price from that event. What the hell is this thing? How do I look into it? And there wasn't much information available out there to read about it. So I just kind of quietly, was trading with it. And it was kind of a pain in the neck to make those adjustments. As far as time frames and all. It's kind of similar to doing one on Thinkorswim now. So that's kind of a shot at Thinkorswim, because I know that there have been thousands of requests over the last 5 to 8 years for the anchored VWAP on Thinkorswim, and they haven't done it. So get your act together, Thinkorswim. But anyways, it was in 2015 that I convinced TC2000 to put a point and click anchor on there. And that's when it really, really clicked for me, because there was no more making these adjustments. I could, really look and see how the prices interacted with the volume weighted average price from various levels with point and click, just real easy.
Mm-hmm. No, I think that's just such a great example. And on that, so back then, I wasn't trading in 2005, and Chris and Judah, I don't know, one of them might not have even been born then. But were people using VWAP at that point, or was it sort of a bit of a well-kept secret?
I think it was a well-kept secret. Again, I mean, I didn't really hear anything about it. There was no research available that I could find. So to me, I didn't even think it was a secret. It was just something I was doing. I didn't really think about what other people were doing. I just figured, well, I don't know why this isn't out there, but I'm going to continue to use it. I didn't really think too deeply about it. I just saw an advantage for my trading and, went with it.
Yeah, that's great. And the reason why I thought it was just such a great moment, aha moment, was that like VWAP is on 99.99% of traders' charts now, I would
Right.
imagine, right? Chris, Judah, do you both, do
Yeah, I
you both
VWAP
follow
on
that?
my chart.
Yeah.
Yeah, I mean, I think it's just gold standard now. And I just think it's
Yeah.
amazing that your aha moment was, hang on, VWAP might be useful.
Yeah.
Cool. And so we are continuing with the contest for next week. So if you want to win a free month of RU, just like, subscribe, and comment below your biggest aha moment or breakthrough in your trading. The best answer will win a free month. Right, let's get on with the show. And tonight's hot take that I introduced at the beginning that we want to talk about, technical analysis. Is it the be all and end all for traders? Brian, take it away. You can go first.
Well, I don't think it's the be all and end all, but it certainly tells us, the truth of the market and what the market values and what's important. It's, as I always like to say, only price pays. So at the end of the day, um, you know, stocks do trade based on fundamentals, but the trends behind those are too long term for the time frame that I deal with to really matter too much. I look at it as it's the collective psychology of all the participants. I've said that, people will sometimes say to me, "Hey, Brian, I saw you tweet about that stock and I know you like it, but did you realize this? Did you know that?" I'm like, yeah, just ignore that stuff. I really don't care, what people's opinion is or what they think they know, because, and it's no disrespect to anyone else, but I've been doing this, full time since 1991. I know my process, and I know that the collective opinion of the market is represented in price. So one person on Twitter, harassing me, telling me I'm stupid and that that's the wrong thing and I have to consider this or that, isn't going to sway me at all. To me, it's all about price, and don't get swayed by the news and that sort of thing. I look at fundamentals for some of my swing trades, and I like to see the growth that's there in a stock, because not because I think it's a good company. Let's say, today Upwork reported earnings, and their earnings were up 200%, I think, on an 18% increase in revenue or something similar to that. The stock was down though. So, I'm not going to trade the stock to the long side, obviously, because the stock is going down. And someone on Twitter said, well, why would that happen? Why would the stock go down? Who cares? The bottom line is someone's selling it. But if the stock were going higher and it was breaking out like it had the capability to do on a weekly time frame, I wouldn't necessarily say, "Oh, I like this because the fundamentals are good." To me, it's all about the psychology on the chart for price action, but the psychology of fundamental analysis to me means we've got all these growth fund managers out there that have to buy stocks that are growing. And what does that mean? A growth stock, to me, is a company who has increased revenues and increased earnings. Those are what those funds buy. So if we have a stock that's breaking out that has so-called good fundamentals behind it, then it gives me a confidence that there's a pool of buyers that are likely to support the stock. So I'm more interested in it, of the fundamentals, because I know it's going to bring other people to the to the action, to the price action. And then if it confirms on the price chart what those fundamentals are saying, that's great, and gives me a little bit more confidence, I suppose, to hold
I thought
something.
that was what was really interesting. I don't know if I read it in your book or perhaps on an interview, but just how you spoke about, you're aware of fundamentals and you know that certain fundamentals will attract certain money managers, but fundamentally for you, price pays. And I think we've got a really interesting one at the moment. And I think, Chris, Judy, we've spoken about SMCI every single week, I think, but it's really the name of 2024 so far. But Brian, when you review like a chart like this and you're talking about price action pays, at the same time, though, there must be fundamentals driving this massively, because this is, I think we're not far from a triple on this breakout now.
Okay, so here's SMCI. On the left is the daily time frame. On the right is the 30-minute time frame. And that orange line that you see there, that's the 5-day moving average. And if you follow me on Twitter, you know that this is my mainstay for intermediate term trends, meaning if we're above that rising 5-day moving average, there's no way in hell that I'm going to sell that stock short. If we're below it and it's declining, there's no way I'm going to buy it, because I'm fighting the powerful trend. So we remain above that 5-day moving average. The path of least resistance obviously is higher here, higher highs and higher lows. So I'm not going to fight that trend. And I also want to know the volume weighted average price. So for instance, from that break, we saw there were 2 days in a row where I'm sorry, from this break right here. I have to go back further to get that first gap. 2 day, the second day and the third day, we came down to the anchor right to that and bounced immediately. I had little day trades in there, which, I look at it now, and my intent was a day trade though. Hindsight always is perfect and says you should have held some, but that's kind of what I'm looking at. And then on the daily time frame on the left, we're above a rising 20, 50, 200-day moving average. I don't go near these things. I'm not the type of person who's going to fade this strength. If I were to say I'm interested in day trading it, I'd look down to a 1 minute time frame and I'd say, here we are chopping above and below today's VWAP. Here's yesterday's volume weighted average price. That's the volume weighted average price from the CPI, and this is the year to date. So I'm not sure what the question was, but we can kind of go from there.
No, I was just sort of wondering how it all married up to get such like a crazy move, but you analyze that extremely well. And just to touch on you, anchor VWAP, have you anchored to the day it broke out?
That's right here. That's what this purple one is.
Yeah, cool. That's what I was just in case.
So what I was pointing to actually in there was that, that day one move, and the next morning it gapped up and it pulled back down to that. So at that point, this was day one right in here. And then, so that was day one. We gapped up and we pulled back and we touched what was the prior day's VWAP, the 2-day VWAP. So one of the strategies in my book, and one of my favorite things, is when you have a strong stock, it pulls back to the prior day's VWAP, and then it gets back above the daily VWAP. Now, you won't really get much precision on a 30-minute chart, but as it gets back above the daily volume weighted average price, that's generally a very good place to buy the stock that morning.
I think that's really interesting because Judah and I were having a conversation earlier. I think we're in a group and we're talking about SMCI, and I think you were on a plane the day it broke out, Judah, right?
Yeah.
And your comment was, "Oh, I think I missed the move."
Not missed the move, but missed the best. I guess the risk was skewed at that point because of how quick it moved off open. It went from the alert hit 348, and that's when I attempted to buy it, but the service on the plane wasn't loading the proper ticker, and I looked back a few minutes later and it was 380. And at that point, it's is it worth chasing? You don't know where it's going to go. I mean, it never gave a reason to sell along the way. Maybe peel some off, but to exit the full position, I mean, it hasn't really broke any of these moving averages or had any massive pullback days. So looking at it, yes, you'd probably still be in it, but you don't know that that's where it's going to go. So in the moment, you don't want to take it just because what you think it can do. I mean, at that point, it was 380, and I think low of day was what it was. Yeah, I guess I could have took it, but it was a 10% pullback to the low, and it was just I missed it, and I was on the flight, and I was like, I'm not chasing it because I don't know what it will do. But yeah, like you said, fundamentals definitely drive it, but it's also this massive 6-month base that it had and break out above it. You don't need to know any of the fundamentals to have taken this trade, in my opinion.
Agreed 100%. A lot of the trades that I take, as we were just talking about, SOUN is taking off. I don't think they have fundamentals. So, if the price action is there, that's good. But if the fundamentals support it, it's just, to me, bonus confidence that there's going to be a pool of trader. You're not going to have people jump in on it and try to fade that move because it's some little bullshit stock. That it's more likely to trend than if it does have fundamentals supporting it.
No, absolutely. And Chris, original question over to you.
Yeah, I think a lot of it depends on trading style, whether you rely solely on technicals or if you take other things into account. But I think that anything that can move price, any of those inputs, I think that for my style, I do like to pay attention to those. And so while price is the ultimate, like guide of is that actually mattering to it, I like to understand, what are like the key variables of why the stock is moving. And so if you have something like SMCI, you have the fundamentals are one variable of it. And you also have, the volume distribution is another variable of it. That very long consolidation that we talked about, that kind of resets a chart. If, that's where the average price is, if that's where real equilibrium is, and then it starts to have another leg up. It's kind of like a consolidate, reset, equilibrium, and then next set. So, and then the option activity on it too. I mean, that's a huge driver for the stock of, people buying up the call volume and, gamma driving it. So I just like to be aware of what are the actual inputs. But at the end of the day, the price is what really matters, because if people were buying calls and if it had good fundamentals, but it were going down, I'm not going to fight the market on something like that. Price is basically what validates the thesis behind it.
Mm-hmm.
Well said.
But what we have now is basically a lot of people, like obviously there's going to be people that have missed SMCI, but now we seem to have a lot of people just trying to guess the top. And Brian, is that just something, I know you just touched on it then, but is that just something that's not your game at all, and you're just going to steer away?
Yeah, I have no interest in that. I that's where I have lost more money in my career than anything else, is trying to pick tops and bottoms. So I simply have determined that it's not my game to play. I will buy, after a pullback once it starts to get moving again on the long side. But I have no interest in shorting a stock like that. You leave it to the people who are great at that. And I know there's a lot of people underground that, are really good at that type of trade and specialize in it, but definitely not me.
And Chris, what about you?
Yeah, I think again, it goes back to trading style. And like one of the things that I like to look at, because I do a variety of different trading styles, like intraday, very short term. I do options trading, I do swing trading, I do fundamental trading. So I do like a whole lot of it. So I think it just depends on what time frame you're trying to use for it. But again, going back to what are the key variables that are moving it, it's you have Nvidia's earnings and revenue are doubling and tripling. So is the stock. And it's the same thing with SMCI, because that trades off of Nvidia for the most part. And so we have Nvidia earnings coming up soon. And if they say, hey, we're actually ahead of where we thought we were, then you might have a continuation of the move. But if they start to say, I think that we've seen the bulk of it and we're just going to level out for the rest of the year, then that's a huge input that will impact SMCI. So I think it just kind of depends on your time frame and what you're actually trying to do with it. But as long as the key variables are in place, that's what really keeps a trend thesis in place for me.
Yeah, absolutely. And I think I got to be honest, I'm looking forward to a Trading Takes episode where we don't talk about SMCI. But I mean, next week if it breaks through 1,000 and we're at like 1,200, yeah, apologies.
Might do it today.
Yeah, or today even. Yeah, apologies, guys. We probably will talk about it again. But just to wrap this segment up, I think one thing I perhaps, and I remember your first book, Brian, was the first book that I ever bought when I started trading. And I think, what you just said about price base, because I think that's so key in that, because there are a lot of people who could be like, but the fundamentals, as something's fading away from them. So what would you say to just, I suppose your advice might be pick up my book, which would probably be a very fair comment. But what would your advice be to someone who's like, fundamentals?
Well, I mean, just observe how price action behaves around fundamentals. So, today, for example, like I said, UPWK is a great example. And the funny thing is, it gapped up yesterday and it's got this long-term base. And I looked at it, it had a lot of volatility around the open. And I thought, so it said the earnings are due on the 14th. So I figured they came out in the morning. So I tweeted about it, said, hey, earnings are out. It looks good. It's ready to break out. And then someone corrected me and said, no, the earnings are after the close. So I obviously didn't read the news. I just made an assumption there. So fortunately, I got out of my position yesterday. But today, we see that the numbers were strong. They were, what should have driven this stock out. The revenues went from 161 million to 184 million. So let me pull that on the screen since I see you're sharing mine. And I was looking at the weekly chart. I've been looking at this one for a while, thinking this can get going. Revenue earnings went from 4 cents to 20 cents per share. That's the type of stock that theoretically the fundamental crowd should be involved in. But we saw it gapped up to 15.40 and then just shit the bed here. It's down at $14 per share now. So price is way more important than a 14% increase in revenues and 400% increase in earnings.
Mhm. Yeah, absolutely. And I suppose the thing is as well that, the average trader won't know is something could have been priced in or expected, and then you don't get the reaction that you expect. So no, that's a great conversation there. And for this question, I think I know your answer, Brian. So I'm going to go to Chris and Judah first. What are the most useful technical indicators?
The most useful one, I mean, it depends on how you define technical indicators. Like, I think price itself, price and volume, I think that those are really the two like cornerstones. And then I think that VWAP is kind of a great guide, or anchored VWAP, of just how you can track, who's in there and at what price, and how that relates to the trend. I mean, that's really, forgive me if I'm, not summarizing that correctly, but I think that that's a lot of what Brian, is looking at when he's using anchored VWAP. It's thinking about who's in there at what price, and is a trend in place with either higher lows, higher highs, or lower highs and lower lows, and then building a thesis and picking entries and exits kind of around that.
Mm-hmm. Yeah, and Judah, do you want to chip in?
Yeah, I think what Chris was saying with the price and volume, if that's what we're considering indicators, is a must. But price is price. If we're talking about volume, then yes, volume is my number one. I don't think you really need anything else, but I do use moving averages and VWAP intraday, but I don't really trade much intraday. It's all swing. So even though it's on my charts and I look at the 1 minute throughout the day, everything is on a swing side. So VWAP is there, but it's like, it's not too much to me. It's really the moving averages, I guess, is everything else outside of price and volume.
Well, I think that's what's interesting is I never counted how many technical tools or indicators there are available, because there's we're in the hundreds. But I think one thing, it's really easy, and I think particularly if you're new as well, it can be really easy to crowd your screen. And I think a lot of the time it will just be a distraction unless you've tested how that indicator works with the most important thing that the key theme that keeps emerging is price. And if you don't know how it reacts with price, then I think it's just going to be a distraction. So it's pointless having, let's say, a moving average, like, I don't know, let's just say it's 200, 1 minute 200 exponential. You've got that on your screen, but if it's not actually serving a purpose, then I think it's just going to distract you, and perhaps you're going to make decisions that you don't need to or want to. So Brian, what are your thoughts?
I agree with what everyone here said. I mean, price first and foremost, because only price pays. Volume, not the way people traditionally view it, though. I think that so price, volume, and time are are what makes up the volume weighted average price. So multiple time frames to me. Real perfect example is the SPY. If we look at that over the last 2.5 weeks, the market has been rising pretty much every day until this little hiccup the last couple of days off that CPI. But the market was rising, and it was doing so on lighter volume every day. The volume kept diminishing, and a lot of people were arguing, hey, the market's overdone. It's got to pull back because the volume isn't there. And the point is, though, that yes, volume was pulling back, but price was going higher. You can't argue with volume. Price action, you get paid on price, not on volume. So if you then took an anchored volume weighted average price from that low, where the volume started declining from, you'll see that the price was above the volume weighted average price, meaning that the average buyer was making money. So it doesn't matter if it's on lighter volume. That's just a reason to maybe be a little bit cautious. We've seen recently all the people talking about seasonality, about interest rates and that sort of thing. But if the price is going higher, then price is the only thing that really matters at the end of the day. So I use price, volume, and time. And as you saw on my screens, a couple simple moving averages, but I have no hidden screens with, the magic indicator that is the secret to successful trading. It's about keeping it simple.
But I think that's an interesting point, though, that I think, and particularly if you're new to your journey, everyone is looking for some sort of magic indicator which will suddenly make them millions. Is there anything even close to that existing? Right, I know that's a bit of a stupid question, and I think I know your answer, but I just want to hear your response.
No, that's human nature. I mean, when I first started trading, I looked at every single indicator and oscillator out there, and I would get excited about them for a week and then start trading with it, lose money, and say, well, that thing's garbage, just like everybody else does. But at the end of the day, it really comes down to just keeping it as simple as possible. I love the quote, the market's greatest disguise, or simplicity is the market's greatest disguise. And it really is. It's about supply and demand. What is the stock doing? Where are the key levels to be aware of where there might be a shift in that momentum? And if it doesn't shift there, then you don't argue with it. You just, stand aside and say, wait, this is confusing. Cash is a position. That's, you can't argue with it.
Mm-hmm. So you touched on, you've looked at lots of indicators, perhaps humorous. Which is perhaps the most overhyped and worst in your experience?
I really don't know, because I don't pay. Okay, candles. I think candlesticks are overrated. Everyone likes candlesticks because they are pretty and they're good to look at. But I have really never met anyone who makes money because they identified 3 marching soldiers or whatever all the stuff is that they, teach, or the pattern. And I think patterns, cups and handles, heads and shoulders, I think they're overrated as well, because people are just kind of trained to become pattern recognition monkeys rather than understanding the psychology of what goes into shaping that pattern. That's what makes what's more important. Hey, since that earnings report and the stock gapped up on huge volume and it pulled back to the rising 5-day moving average and met the anchored VWAP from that earnings report, what's the psychology of what comes in at that point is more important than just saying, hey, we're at this point. Well, why? That's what matters. So not to pick on any particular, RSI, MACD, any of that stuff, but candlesticks and patterns without understanding the psychology of them. And I think that candles in particular, people say, well, you can't look at the candle until the day is closed. Well, I can look at intraday charts all day long and tell you what that candle's looking like. So yeah, that's my opinion there.
Well, that's a great answer. And Judah, guys, same question to you then. Oh, Chris first then.
Sure. Yeah, I agree. I think that I have like a saying that I use, is that you need the 3-dimensional and the 2-dimensional. And if you're just looking at the shape of a chart, then that's just 2-dimensional and you're not understanding the reason behind it or the structure behind it. And so like just an example, like the head and shoulders pattern, where you have, a peak, it slams down, another peak, down, another shoulder, and then down. And so on the surface, it might look like, oh, this stock's going to head down as soon as it breaks that neckline. But if you actually look at the structure behind it, you have people and volume basically getting in at a higher price, and it's failing to follow through. And then if those people who were waiting for a breakout now see it trending the other way, then they're probably going to, stop out, and that can cause a flush. But just because something has that shape, if it doesn't actually work, it doesn't mean it has to, just because it looks like it. So, SMCI is, again, another great example where it had every bearish pattern kind of along its consolidation route, and it had every topping candle pattern. And so it's really not just looking at the 2-dimensional, the shape, but you have to take other things into consideration too. And that really helps you to build a strong thesis.
Yeah, interesting. No love for candlestick patterns then. And that just seems to be the chart that I always see retweeted a million times. Use these 9 as your cheat sheet or whatever it is.
Right. Yeah.
Judah, any thoughts?
So specific indicators, I don't know too much about indicators to talk about them. Like, what are they called? Bollinger Bands?
Yeah.
I don't know, there's 1,000 of different indicators, and I don't use really any of them to speak about them. But in the sense of like candlestick patterns, which I don't really use, but I know people do use them. Like I believe Nate will use them sometimes, and he'll like look at the soaking of the candle over a few days, and he could tell that like people are soaking it by either buying or covering, and there's shorts in there. So depending on how you use it, it could be beneficial. And same with the patterns. Like, yeah, I mean, everyone knows what they are. The difference is how they trade it. When they buy it, when they sell it. Some people will take a break out on a daily and just be out by the end of the day because they can't stomach the swing. Or people will take it after 2 days, 3 days. So everyone knows, like, it's nothing special. Everyone knows what a flag is, a cup and handle, but the difference really is on how they trade it. And if they take it multiple times across different names, as long as your risk reward is in check, like, you should come out ahead. And I mean, it works sometimes and it doesn't, but that's all trading really is things that work and don't. It's about how you risk it, if that makes sense.
Yeah, no, absolutely. So the general thesis is, if someone's sharing that chart on Twitter, the 9 perfect candlesticks that will revolutionize your trading, they're probably not worth a follow. That's the general gist that I'm getting. And some absolutely great other points as well. Brian, I was hoping that you may be able to show us, I know you obviously just showed us SMCI, but just a few more anchored VWAP examples, if that was all right, and perhaps just how some of us could implement it, into our trading.
Yeah, absolutely. Okay, well, here's Bitcoin, for example. This is one that I've been tracking. I mean, everyone looks at Bitcoin now and then, right? But I haven't taken it seriously in a while, until really late last year. And I was looking at a number of things. Here we see 3 different time frames. On the top is a weekly chart, and that's approximately the 200-day moving average. And then I just have anchored volume weighted average price levels on here. The red is from the all-time high, and you can see last year we banged up against that a bunch of times, and we finally broke through it right here in October. In October, if we look down to the bottom left corner, that's the daily time frame. And that is the break of that move, and what was really the lead up to the ETF approval. So to me, that marked an important event, that we saw momentum build from there. And then what you see on this daily chart is that's the beginning of the year. So that's the year to date anchored VWAP that continues to build every day throughout the year. And then the anchor from the actual approval of the ETF. And that was that red high there on Thursday, January 11th. So on the day that it got approval, it promptly sold off. Buy the rumor, sell the news. And then it pulled back all the way down to the beginning of where the move began. So the anchor from there, and I was, putting this on Twitter days in advance saying, be aware of this level. It's a likely place where we'll find support. Now, I didn't think it was going to just halt there and turn the way it did. I bought it as it was rallying away from that level, and then, got a nice cost basis. It rallied up and found supply at the year-to-date anchor, the blue line right in there. And as it finally pushed through it, then we look to this 2-hour time frame. That is from, this resistance here. So this is where this most recent momentum campaign began. And that's where I went from about 30% to 100% long in my Bitcoin account. I actually have some Ethereum as well. But that's where I bought, the full position, because that's the new momentum campaign. I sold some a little bit last week as it broke 50. I was thinking maybe we get some round number resistance and a sharp pullback down towards the VWAP from the beginning of this move. So I sold a third of it. I'm still holding 2/3 of it strong. And this is, these are right now, I think if we get a flush in Bitcoin, it's likely it'll come down to wherever this volume weighted average price might be. So currently at about 48.4. So I'd probably put in a bid at 48.420, just because it's Bitcoin and you got to trade it in 420s if you can.
Yeah. And just to just focus on a point that you with your initial purchase, you waited for it to bounce off of VWAP, and then
Correct.
were you risking, because I see it just wick below.
Yep.
How tight do you keep your risk on that trade?
Below that low. So
Okay, yeah.
what I look for is I look for it to pull back to the volume weighted average price. And I'll do this on a 1 minute chart if I'm scalping as well. So let's say NVIDIA comes back to the rising volume weighted, or SMCI comes back to the rising volume weighted average price for the day. I will look at it and say, okay, maybe it holds there for 2 or 3 candles. Maybe it shakes $1, $1.50 below it on a high price stock like SMCI. But as it gets back above that and it starts to bounce away from the volume weighted average price, that's when I want to get involved. So I've seen the test of the VWAP. To me, it's been defended. And now, if it violates that low underneath, for instance, right here, if I buy, let's say on that second bar right in here, if I buy right there, my stop goes underneath here. So I'm getting at the beginning of that new momentum shift, hopefully. And in that case, it did. And for instance, I bought, the breakout here. I usually am not a breakout buyer because, breakouts tend to get sold into, but this one was from a tight range. So I'll buy the breakout if it's from a tight range. Part of my decision to sell some up near 50 was also that it was breaking out past this high. And I figured, well, there might be some supply there, round number breaking out, chasers coming in, feed a little bit off to them.
That's great. And I think we spoke, so initially when we had Nate on the first episode, which was like 6 weeks ago, and we talked about the Sell the Newsy event for the ETF. And then from that point, I think everyone had a good idea that we were going to get some sort of pullback. And it's about as picture perfect as it gets. And I think what's great about this as well, I was just thinking that, particularly with Bitcoin, because it can be annoying to have it up 24 hours a day, but you could just set a price alert, right, for, what was the level, like 40,000, I think it was. Just set a price alert for
48,400, yeah.
Yeah, no, I think that's good. And do you have an example of perhaps where it's failed as well, and perhaps there's signs that the trend is going to reverse?
Sure. I mean, I could give you 100 of those, I bet. I'd have to think of some off the top of my head, but let me just look at some of the recent trades that I've gotten out of. Here, Roblox was one. I got involved in Roblox, and this was kind of a weird one because I got involved in Roblox. I thought it was holding the anchor from, let's see, hold on. So from the anchor from this low right over in here, right there from the beginning of the month, that low, it looked like it was holding it and bouncing it right in here in this area. So I was a buyer, I think, right there on that day. I typically look to sell some, and I was thinking it had the power to make it past the VWAP from the earnings. That was mistake number one. My stop was under here. I never set the stop before the open, so I rode it all the way down. And that one hurt. But what I do is then I switch to a 5-minute time frame on the day of the pullback. And on the 5-minute candle, I always wait the first 5 minutes of the day. So if I don't set the stop before the open, but I give it 5 minutes, and then I set my stop underneath that 5-minute low. So I stayed in the trade through that day. And then the next day, as it gapped up, I raised my stop up under this level. And now I've got my stop up under here. I've actually sold half of it at just about break even, because big move hopefully begins, and I can, add back here with a stop under here or here, and that 5-day moving average kind of flattens out and starts to turn higher. So that one didn't work, but it hasn't hurt me yet, only because of that 5-minute rule.
Yeah, no, that's a great get out. And this is probably a good moment just to touch on, if someone wants to learn about Anchor People. I know you've done tons of interviews, but what's the best way for them to find out about it?
You got it right there. You got the paperback version.
I prefer paperback. Yeah.
Yeah.
So and I think this is available. It's available. I went.
Yeah, it's Amazon.
Yeah, and your Twitter handle is just below your name as well, Alphatrons, correct?
Right. Cool.
No, thank you. I think they're just. My good friends use. I should know what he does, but I think he works for a bank, So he trades part-time, but all he's doing is just setting price alerts for anchored VWAP, and he's always messaging me like, watch this, watch this, watch this. I just think it just, when you find an indicator that works well with your style and fits in with your lifestyle, it goes back to our earlier point about technical indicators, then I think that's absolutely where they are the most valuable.
Sam, I think that's a great point as well. You asked me which ones I think are overrated, but I think that, if you find value in candles and it's working for you, by all means use it. I would never be so bold as to say, hey, you trade based on RSI. That's stupid. Don't do that. If it works and you're making money and you understand it and it suits your personality and your risk profile, do whatever works. Don't mess with what works.
That's another good point, is that, like, I think you were saying before, Sam, people have too many indicators, and what they should do, like, just keep taking one off. And if it negatively impacts your trading, then add it back and take something else off. If you don't realize the difference in your performance, keep it off, and keep doing that until you find like the most simple product that is going to turn out to be successful for you, and vice versa. If you don't have any indicators, just keep adding one. And if it helps, keep it. If not, try something else. But you have to work around your own preference, because everyone could be using different indicators and still be successful. And like, you won't know until you try it, because everyone has different ideas and personalities. So it's really up to you, and then you have to come up with your own process. But like, all we could do is share our ideas and what we use.
Yeah, and I think that was the point that I was sort of trying to make as well. Is I think if anything helps you make a decision, then it's absolutely worth the screen real estate. But I think sometimes, like, I just know, I got some friends who say, oh my God, it's holding this and whatever. And I'm like, okay, well, what's the relevancy of that? Does that affect your decision making? The answer is like, no. And I'm like, well, if that's going to make you make a decision that goes against your system, then actually, do you need to know that it's holding that if it doesn't affect anything? But if it's part of your decision making, and that means, it's holding this whatever, moving average, that means I need to cover my position, or whatever, then I think it's absolutely worth the screen real estate. And I was at a point where I had loads, and I slowly just reduced it back to the real basics, and just obviously I have the standards of VWAP and a couple moving averages, but that's about it. So let's move on to, we've had a pretty crazy couple of weeks. Nothing seems to want to halt the market. It just seems to keep on tracking, and we SPY broke 500 recently. So I suppose, Brian, this is a real general question, but what are your thoughts on the market at the moment, the broader market, and the performance of the market?
We're in a great period. Enjoy it while it's here, and realize that, the phrase "it only ends badly" is for uneducated people who don't have a plan for getting out when it starts to turn. And, just listen to the message of the market. Right now, I don't make any projections about the market. I never have price targets. On a long, my price target is higher. I'll be aware of levels where it might halt, but a price target means nothing to the market. So I'll look at it and say, hey, there's a level of interest where it might rally up to and find supply, like I did in Bitcoin near 50,000, and it briefly stalled there. But I, sell a little bit, ring the register, lower your risk on the balance that you have. To me, it's all about just listening to the market and not projecting.
No, great points. And Chris?
Yeah, when there are times when the market is very volatile, either up or down, and volatility works both ways, and you're having giant moves, you're having things like Nvidia, SMCI, the market ripping, I think that there's a lot of concern of like, oh, this is getting out of hand, this is this is getting toppy or something like that, and you miss out on so much more money than if you were to trade that and trend that, if it's your style, for as long as it lasts. And then when it does start to reverse, have a plan for that. So just staying out because of, the shape of the chart, or because the market's going up, it's like, that's, those are periods where real wealth and accounts can be built, and just avoiding it because you think it's gone too far too fast. I think that a better way, again, if it's within your system, a better way is to try to capitalize on that and then just have a plan for when it reverses. And so like something that I've been doing is that I have, the top 5 movers in the market. So things that are trending like Mara, SMCI, ARM, things like that. I basically want the strongest of the strong so that if the market's doing well, I have go-tos for things I can trend upwards. And then I also keep on my radar what has relative weakness, what's trying to go down anyway, but because the index is going up, it's kind of keeping it supported. And then I make note of those things. And if you have a day where the index starts to slam down, then I can immediately go to that to trade the other way. And so I think it's just really about being prepared for either scenarios, but to just wait on the sidelines because something looks like it's moving up too quickly or other things. Imagine someone who sat out all of 2020 and 2021 because they said things are going up too fast. This is a bubble. This is not going to last. It's like, yeah, of course it's not going to last, but it lasted a year. And if like you just sit out for that, you're really missing out because those are periods in the market where you can really make great gains. So I would say just, try to align yourself with the magnitude of the move in the market and then have strategies and plans for when that eventually does turn. That way you're prepared for that.
And Judah, what are your thoughts?
Yeah, I mean, obviously we're in a great time now. And this is, I believe, the biggest move we had since COVID without like a 5 to 10% pullback. Like usually, we have these 15. Here, let me share my screen real quick just to show you what I see. But so this is the SPY, and like you see like these rallies that we have 18%, and we have this another 18%. We have a 20% here and the 12% here, but we have these deep pullbacks after each one of those. And like right now we're up, I believe, 22%, and we haven't seen something like that since COVID, and we're breaking out of this kind of 2-year base in this area, and not many people wanted to believe that we would go higher, but there's no reason right now, unless it's extended, to be on the short side, and there's no reason to be sitting out on the long side. But like Brian said, I don't really give price targets. I don't trade off my own, my own bias and my bullishness, for example, like to say, but it's really just all trading off of these alerts and rules that I have. And if it shows me that I shouldn't be in the market, then I won't be. But right now, it's not showing that signal. So like what it would do tomorrow and next week, I have no idea. But right now, it's clear that we're in an uptrend, and there's no reason to be sitting out or being on the wrong side.
Yeah, and since you're sharing your screen, so Judah, what's been working for you like the past, since last week?
Really everything has been working, but it's about
That's a good answer.
About I guess picking the best ones out of it. Like for example, liquidity traps. I know they have been working, but I haven't been trading them because I have more confidence in gap ups off, like it could be news. I don't care what the news is, but as long as there's gap up with volume and it's positive and the chart looks good, then I'll take it, as well as breakouts. And really it's just about choosing, the best out of your setups, the ones that would work. So like, for example, lift yesterday was something that I took. I took it off open and I'm still in there. I haven't really looked at it since. I know what it's doing, but intraday, I'm not worried about it or looking at it. And maybe I should peel some off today or tomorrow, but this is just, it had earnings, it gapped up. The weekly kind of reminded me a little like coin. At this point, it's gone up too much to confirm that, but this thing's breaking out of these bases, and I don't know. It's just these gap ups that I don't know. This is a whole nother topic to get into, but like these basically these gap ups on news and earnings and breakouts, like SMCI we spoke about, and that really everything's working.
You just LYFT was lifted completely wild though, because I think earnings was 2 days? Was it 2 days ago after hours? And
Yeah, it was along
that
with
was
Hood.
one of the worst typos ever, I guess. Right?
Yeah, it pretty much went to where it is now after hours, right? What did it go to? It went to like 1920,
Yeah, you're right.
came down all the way, and then once it came back down, and then it opened up and it just continued going higher. Like I think we stabilized at 1450. The next morning it opened up around 1450, and then like pushing higher throughout the day. I mean, this was a positive sign that it held and grinded higher instead of just breaking down. And knowing that it went to 1950, it's like this kind of helped, my. It's weird because you would think like it would go lower, it squeezed everyone out or everyone's dumping, but it would just brought my confidence higher.
Yeah, I mean, I must admit I haven't looked at it since earnings 2 days ago, and I'm pretty shocked that it's almost back to. I mean, it was highs
Yeah, me either.
of just over 20, and it's back. It's at 19 at the moment. So
Yeah, like I don't know.
and Chris, you're our details man. What happened? We weren't planning to talk about this, but I think since we've got it up and we mentioned it, what happened on that earnings call?
So basically, I think for the Lyft example, I wasn't following it too closely, but they overstated some number. They said it was 500 basis points, and it was actually, they had the period in the wrong place. And so it was like 0.5 basis points or something. So it was like a factor of 10. They had it wrong. And so you had a big gap up, then a big slam down, and it was just a mess. But I didn't trade it.
I mean, it's a mess. And what made me laugh was the CEO. I think he just said, "My bad." I mean, it seems like quite a big mistake. Usually, there's a bit more of an apology that goes, "My bad" is usually something quite small. And Brian, your question to you then, over to you. What's been working well the past sort of week, or you're not here every week, so you can go a bit further back if you like.
Yeah, I mean, I agree with Jude. I mean, a lot of things have been working really well. Unfortunately, I sold my crisper yesterday. I kind of stupidly thought we were going to find some supply at the anchor off the all-time high. But that was a nice trade. I mean, I've been, in Bitcoin holding that nicely. Just, I mean, any loss that I take generally anyways isn't gonna hurt me badly. I almost took a large loss, like I said, in Roblox, full risk unit. But fortunately, we've got a strong enough market that it came back. It's just a matter of trying to be focused enough to look, and similar to what is going on with the weekly chart in the which one was it, Judy, you're in right now?
Lyft.
Hood looks very similar
Yeah.
on that weekly chart. We kind of had a breakout 2 days ago on earnings, and now that one's getting ready to maybe get going on a longer term time frame as well. So there's just setups galore out there that look like they can get going, and that's my focus never changes. It's what looked like a low risk, high probability trade. Get in, repeat the process, get stopped out, trail stops up, take partials. It's all the same. It's simple.
I like the simplicity, and I like what you said as well about. I think good markets are forgiving. Like you can make a mistake or you can take a loss, and it just doesn't matter. Chris, what's been working well for you?
The relative strength, relative weakness. Again, I've been more trending names when I can, especially for a week at a time if I'm using options. And so if the market's ripping, most days I'm just identifying what are the leaders, what is already trying to go up, and then the market is helping it. And so those will be my go-to names for trending strength. And then on the opposite side, what is relative weakness? What is trying to go down, but the market's kind of keeping it up. And then if the market pulls back, those are the first names that get hit. So what I do is I try to find something that is leading or something that has relative weakness or relative strength. And then I'll usually try to find a good entry for either puts or calls. And that's been working really well.
Great. That's great. And we have some questions prepared. So we ask, like pretty much every week, we ask members of Investors Underground just any questions for our guests. So we always reveal who it is. And just a reminder, guys, that you can join us at Investors Underground, investorsunderground.com/trading takes. And tonight's questions. So, and just also a reminder of the contest, like, subscribe, and what has been your biggest aha moment or breakthrough in your trading? Best answer wins a free month of IU. And Brian, are there? And I know the answer because I think you touched on this with Anthony. One of your biggest losses when you first started out trading. But are there any sectors or asset classes that you avoid trading altogether?
You've got them listed right there. ADRs, I have no interest if the trading is on a different exchange, such as London, and it trades overnight, and then it has to gap to get to where in the U.S. to catch up to overnight trading. I have no interest in that because it's too difficult to manage risk. Commodities, gold, like if you're going to trade GLD, it's just kind of stupid. It gaps every single day. So I don't do any commodities, and I don't do actually any commodity related stocks. So, airlines, I won't touch an airline because it's related to oil. I won't touch banks because they're related to the cost of money, which is interest rates, which is a commodity. You go down the list, every single one of them. So I don't trade those. I don't trade any Chinese stocks. I'm not even short. I just don't trust China. We've got so many good opportunities in the U.S. in our market, and where I live. Why branch out? It doesn't make sense to me.
I thought you were going to say biotechs as well because of the
Well,
story that you told on Anthony's. I think you said you had a rough weekend or something.
Yeah, I mean, I'll trade biotechs, but I'll stick to the larger ones. If I trade some of the little speculative ones, then I trade them with really small size. I just don't have the stomach for those anymore.
No, fair enough. And Chris, Judah, any thoughts? Anything that you guys avoid?
Well, I just kind of have a follow-up question for Brian. So it seems like the things that you like to trade are things that are relatively smooth, trending well, and follow a pretty, fairly smooth pattern. And things like biotechs, ADRs, things that are gapping, have erratic moves on oil. So things like that, that's kind of what you avoid. Am I characterizing that correctly?
100%. Yeah. I like some sanity to what I'm doing. And something I talk about it also is the personality of the stock. I mean, there might be one good semiconductor stock that trades smooth, but then you've got one that's got a 6% daily range, and I'll stay away from those.
And
So
just
to me, if I can control risk, if I feel like I can't control risk well, then I'll avoid them.
And just as a follow-up question to that, it sounds like your work-life balance is like stress levels and health is really important to you as well. Is that fair to say?
Yeah, absolutely. I mean, this is you got to have your mind in the game here, and anything you can do to, get a good night's sleep, stay healthy fitness wise, get outside, do things you enjoy outside the markets. It's mandatory really for success.
Yeah, absolutely. Absolutely. And the next question from Angel DB8 Girl. How do you avoid taking profits too quickly on a winner? Is it a technical signal or are there other factors?
That's something I always continually still work on. I bought NVIDIA at 521.50 after the earnings. I took my first half off at first third rather off at 530 for an $8.50 gain. And I could look back at that and say I made a mistake, but I could also look back and say that's part of my process. It hit daily R2 that day. So when it runs up to daily R2, I typically take a third off. The way I look at the way I trade is I tend to be very good at my entries. My timing is really good because I'll go down, I'll look at every time frame. I'll look at a weekly, daily. I'll go down to a 1 minute chart if it's in the first 15 minutes of the day. So when I can control my risk right from the start easily, I go in heavily. And when I go in heavily, I want to reduce that risk as soon as possible. And that typically means taking a first third off aggressively, sacrificing even a third, but then raising my stops up under the higher lows and trying to just listen to the definition of the trend. And when we're in a trending environment like we are right now, to be able to have some great winners like this, but it's always a struggle to hold the winners longer. It's something I will always, I think, have to work on.
Yeah, I think you joined we're all in that club there. Chris, Judah, any thoughts?
Yeah, I think as long as you know what your risk is, there shouldn't be any fear. I mean, there's always risk for overnight gap downs, and that's mostly, I guess, with biotechs or if you're holding through earnings. But yes, I mean, as long as you have risk in mind and you know exactly what you're losing, there's no reason to fear, in my opinion, or at least that's what I think, because these things could go a lot further. Like a lot of people, I'm sure, traded SMCI in the day of the breakout and exited the same day. But I mean, look at what it's done. And if you had your risk in place and your stop loss, whether it's mental or I guess if you have issues, preferably hard stop, then like what's to fear? You know exactly what you're losing, whether it's 1% of your whole account or a couple percent or less than, like, you know what the risk is. So you have to figure out why you're fearing, because it's more than just that. And for me, it's just taking something with the rules that I have, and as long as it doesn't break, I'll stay in that trade, you know. And if I feel like it's gone too much, then yes, I'll exit the whole position. Like I believe, like for example, VVOS when it went from like 5 to 45, something like that. You know, you would want, like, at least me, I would pull off the entire position and just move on. But if it's doing something very subtle, or you know, it's a larger cap name that's not a biotech that's $5, then you could have more confidence to stay in there. But I mean, there's no reason to exit a trade if it didn't give you a reason to.
Yeah, and what you just said reminded me of a funny story from Traders for a Cause last year. And couldn't argue when he was on stage, he said that someone asked him why he sold DWAP back when it ran what was that, a couple of years ago. And he said that it went from like 10 to 150 or whatever. What do you want me to do? Like, of course, like,
Yeah.
I'm going to sell. And it's like, yeah.
Also, you're limited to how many things you could actually hold. So if you do feel like this one has played out, but you're not stopped out yet, then I mean, that's another area where like I'll get rid of it just so I have the cash to allocate somewhere else to a fresh move, because I think I could get more out of it. But sometimes it doesn't work. Like you would exit SMCI early, for example, and you know there's a huge move that comes after. Same with coin, and same with the firm when it had the cyber news. Like those three setups were very similar, how they broke out and then just grinded for like a month or two. So like you have to decide whether or not you want to keep that position for a month or two and take that full gain, or move on and take quicker moves. But in terms of swinging, I mean, yeah, as long as you know where you're stopping at and how much you're going to lose, I don't see a reason not to swing and catch bigger moves, because that's the market we're in now.
Yeah, absolutely. And Chris, any thoughts to wrap up that question?
Yeah, I think there's a funny kind of example or story that I'll tell. And when I first got my license when I was like 16 or something, I had an issue with like yellow lights for like my first week. And I was like, you know, yellow lights coming up, and it's either like, oh, I feel like I'm just kind of, I either have to like go through it or stop shorter. And I realized that the reason I had issues with that is because I was always going the wrong speed. I was never going the speed limit. I was either like speeding or going too slow, and that threw it off. And so with trading, I think it's very similar when you're sizing wrong. And so I think if you're sized correctly for the trade that you're taking, it's those decisions become very clear based on risk reward. You can move up your stop, but I think where people have a lot of trouble is when they're oversized on something that's moving well, but they can't really stomach the drop that would be a normal part of the trade. And so when you're going the wrong speed limit, or when you're using the wrong size for a trade, it throws off your whole process. So the first thing I would do is make sure that you're sized correctly for the volatility of the thing that you're trading. And then just think about risk and reward. If you have something that's gone from 100 to 150 and you think it can go to 160, but it could also drop 40 points, then the risk to reward is off now. And so you can raise your stops or do other things. But I think the main thing with not taking winners too early is sizing correctly for the move that you're trying to get.
A great point. And be honest, Chris, were you mainly going too slow, or were you going to,
I was going too fast.
You were too fast. I had you down as a little bit more sensible than that. Right, that pretty much wraps up tonight. Thank you so much, Brian, for not pulling Dana White. It's been an absolute privilege and a fantastic conversation. Where can people find you? I mean, we've already touched on it, but just a reminder.
Yeah, well, thanks again for having me on. Pleasure. And my easiest way is just on Twitter at Alpha Trends, and you can find anything else I do pretty much through there.
Oh, brilliant. No, thank you so much. And thank you, Chris. Thank you, Judah. Just a reminder to like, subscribe, and the contest this week, your aha moments, subscribe below. Thank you all for joining us. And yeah, we'll see you next week. Thank you, Brian.
Thank you,
Thanks,
Brian.
everyone.